Excellent. Well, hey, let me start by saying good afternoon to everybody on the East Coast. If you're on the West Coast, good morning. Thank you guys so much for making some time here to review the webinar that we've got planned for today. Just want to do a quick introduction for our panelists, and then we'll dive right in. Speaking is obviously Jerry Van Dalen. I'm a sales manager here with SmarterCommerce. We're also joined by John Wilson, who's an account executive at Avalara with the enterprise team, and Diego Fernandez, who is the product manager with SmarterCommerce. We've got an exciting agenda for you guys today, as well as a brief demo of Avalara and a brief demo of the JD Edwards to Avalara connector, which the SmarterCommerce team will be presenting. Just a quick heads up, if there are any questions throughout the session, feel free to go ahead and type it into the Q&A item there on your control tab. During the Zoom webinar, our team will go ahead and try and address those throughout the session as we have opportunity. With that said, John, feel free to get us kicked off here. You should have the ability to share your screen.
Perfect, thank you. Usually the most exciting part is me trying to share my screen. So bear with me for one moment while I try to get that up and running for you all.
We are seeing your screen right now, John.
Perfect. That was the next question I had. Could you guys all see that bright orange slide potentially glowing in your office or at home? But first, thanks so much, everyone, for joining today. Appreciate the time to share some information about Avalara, general tax changes when it comes to the manufacturing industry. And thank you to SmarterCommerce for having us, Avalara, and myself on personally. So I'll jump right in just to give a quick background on myself. As mentioned, I'm part of the enterprise sales team here at Avalara, based in the Detroit metro area. And over the last better part of a decade, I've been working with folks leading technology transformations, but the majority of that time has been spent in process and technology overhauls for tax. More recently, the last few years have been spent specifically on groups and organizations using what we consider large ERPs for their sales and use tax compliance. So of course, JDE, as well as Oracle and SAP. So as mentioned, please feel free to send any questions you guys have today in the chat. We'll try to cover those as we can, but if there's anything we miss after the fact, we can certainly come back to those as well. In terms of agenda, first I'm going to touch a little bit on supply chain issues and inflation. Some of those items, how they impact tax compliance and obligation. Then from there, a little bit of updates around economic nexus. Then there's a few other areas that we think are specific to manufacturing that could apply to y'all when it deals with your tax obligations. Finally, I'll touch just high level on who we are here at Avalara, if you're not aware. And then I will show a demo of a couple solutions related to a few of the areas we speak about today. So over the past few years, manufacturing specifically, we've seen the industry deal with persistent supply chain interruptions, major staffing shortages, and even with the potential fourth industrial revolution. If that eases some of these lingering challenges, the sector still has to navigate really complex and always changing sales and use tax obligations. According to some recent findings we have, those weigh heavily on businesses across the industry. And to provide a few data points, we did a survey of manufacturing businesses. Typically, for reference, these are about 500 employee businesses, but I think it gives some light on some larger trends. First things first, the audit rate for small manufacturing businesses was much higher than other industries at about 18%, where we see about 10% in retail and 4% in software. So based on some of those tax complexities, there's definitely more of a light or magnifying glass on the industry. Of these businesses, they've estimated spending over 42 hours of manual time a month on tax returns, 35 or so hours on consumer use tax, and then 30 hours on both tax rates calculations, as well as exemption certificate management. So from what we're gathering, this tier of businesses in the manufacturing sector is averaging almost 150 hours of time on manual tax management activities. First thing to note, we're all well aware that inflation has been very significant over the last 12 months, but to look at a few data points, food increased almost 11% in price in that time. Energy prices nearly 20%, medical care at 5% increases, and then household furnishings, operations prices, as well as vehicles are both at around 10% in increase. So we know managing sales and use tax has never been easy for manufacturing, but the turbulence of these last few years has made it worse. There's been breaks in supply chain, geopolitical upheaval, and inflation. They've driven manufacturers to find new customers, source alternative suppliers, and develop new processes. So one thing we've seen specifically is labor shortages have inspired manufacturers to adopt new technologies that could potentially enable employees to work remotely. So all of these factors and having some flexibility have been great things for manufacturers to pivot and simplify processes based on the larger trends we see in the market. But the other side of that coin is there's also potential considerable tax burden because of some of those moves. So updating the process side of business or the go-to-market side of business has been very impressive. But one thing we've seen from the clients we work with is often that side isn't necessarily mirrored by finance departments that are handling tax compliance. So your finance side or your side may be trying to keep up with all the changes going on in the tax world, as well as the actual operational side of your businesses. And then the other side of that equation is also when it comes to the tax officials themselves, they've also been increasingly relying on new technologies and even artificial intelligence to be more active in finding non-compliant tax payers and trying to get some of that tax revenue. So of all industries out there, we're seeing manufacturing businesses need to be very on top of these changing tax obligations. We looked at a couple things, and this was more for folks that were using SAP, but we see a lot of comparisons there in the market. And we see a large number of factors that are contributing to supply chain issues. And again, as mentioned, all of these can have an impact on how you are doing business with your customers, with suppliers, with distributors, but that can trickle down into additional tax compliance. So I won't go through these items here, but a few things I did want to talk about. Heightened demand, struggling to find staff, potential factory and plant closures, and just clogging at the ports have caused these pivots we mentioned earlier. So a few scenarios we've seen a lot of our clients take and how they impact from a tax obligation could be items like new products. If you've had to pivot or add new products based on some of these challenges, how are you going to look at it from a tax standpoint? Do you look at anything to see if this is taxable or exempt? And if this is a taxable product or service, is there any type of reduced or updated rate? On top of that, if you're bringing in new suppliers or distributors, do you have your resale and exemption certificates on file? Are these actually validated certificates and are they up to date? Based on some of these challenges, if you've moved to more drop shipping or taken on some drop shipping models, do you have certain certificates that are required to be compliant? And who in this equation is going to be liable for any tax due? On top of that, there could be more refunds. So any sales and use tax returns you have, do they need to be amended? So just a couple of these common occurrences can have new tax obligations and something to think about how you're going to deal with them. The next piece we wanted to talk about was economic nexus. And I think we're aware so far, but one thing to key on here is, like in other industries, manufacturers are often subject to economic nexus laws. Again, this is going to be based on sales and use tax obligation through activity in a state, rather than just that physical presence. So since Wayfair has come about, this is going to be something that's certainly top of mind, but the obligation and complexity has definitely grown since that time. We'll go on a little bit into how certain states are going to look at economic nexus, but the big thing to be clear on is there's certainly variance when it comes to state in terms of the amounts and how they're going to calculate these items. So at this point, all 45 states that have a state sales tax, also including DC and Puerto Rico, have some level of economic nexus laws. Since Wayfair, almost 90% of businesses that were surveyed have been impacted in terms of how they do business based on Wayfair and the introduction of economic nexus. And specifically, one of the items we'll get into later is we see home rule local tax requirements evolving, and these are potentially putting additional burden and complexities in play for this industry. First thing that we look at is there is some variance state to state on what that threshold is. It would be nice, of course, if there was more of a uniform level so we could track one number or one metric across the different states where you're doing business. Unfortunately, that isn't the case. So we see some states who are looking at $500,000 in revenue be their economic nexus tier, some at $250,000, some at $100,000, and then we have even some that are at $100,000 or just 200 individual transactions. There's some unique scenarios like Connecticut. They're having a gross receipt threshold of $100,000 in revenue and 200 retail level transactions. New York also has a combination at $500,000 in revenue along with 100 transactions. In Missouri, as of the first of this year, they enacted their own economic nexus thresholds. So again, driving the point home that there's a fair amount of variance across the country, and you can't necessarily apply one broad stroke philosophy and imagine you're totally compliant across the board. In terms of what's included in economic nexus thresholds, that's going to vary as well. Not to get across the different states and how they're looking at things, but some are going to be gross sales, and these include any sales that are made through a type of marketplace. Some take those gross sales alone, but don't include marketplace sales. Some are retail, again, including or excluding a marketplace. Some are just going to be taxable sales, excluding sales made through a marketplace. So not only are we looking at different thresholds of revenue, but potentially different types of revenue we have to account for. And the reason we make this point, as these laws continue to change, there's a fair amount for you to manage in your industry to make sure you're staying compliant in areas where you don't have a physical nexus and already a physical tax obligation. Last item around nexus I wanted to touch on was where we covered those home or local economic nexus thresholds that could be evolving and coming more into play. Currently, some states do enforce an economic nexus at a local level, and you are going to have some obligation to first off register, then collect and file with local level taxing authorities. And these rates can vary based on jurisdiction, not just potentially zip code or zip +4, making things more complicated when it comes to charging, if needed, the correct tax amount. You have some states, however, like Alabama, they have some remote sellers programs like SSUT that can help simplify. And there's efforts in Louisiana to streamline the process of tax collection in its 64 individual taxing jurisdiction. So we are seeing some movement in certain areas to simplify the local level tax obligation, but at the end of the day, this is an area that's still evolving, still growing, and to be ahead of compliance, it's something you do have to monitor. There are a few other items we did want to touch on that can apply specifically to the industry. First being consumer use tax, and we find it's often overlooked for one reason or another, and they may be more likely to be overlooked based on the changes in supply chains. We've seen some of our customers dig into their own stores of inventory, and they end up exposing some items that were purchased tax-free to use tax liability. If you need to pick up supplies from a new supplier rather than have them delivered from a long-term supplier, this can be how that plays out. And that type of flexibility is essential for you to do business, but it does potentially expose to extra consumer use tax liability. Our team has also looked into this and found that issuing exemption certificates for purchases that don't qualify for an exemption can create a higher audit use tax liability than a sales tax liability. Next item to be aware of as we continue to move in 2023 is more business being done on B2B marketplaces. Right now, generally, we're looking at 5 to 10% of business-to-business transactions happening online. However, there really is a significant opportunity to grow in that world. Guessing there's around $100 trillion changing hands between businesses each year, and Gartner did some research and they concluded that business-to-business organizations are showing increasing interest in a marketplace model because they find they can better engage with their partners. It simplifies and improves efficiency in buying and selling processes as well. So these marketplaces face additional complexity because just like a B2C marketplace, they deal with economic nexus in marketplace facilitator laws. However, as the nature of B2B goes, there's potentially more obligation in validating exempt sales by collecting and maintaining certificates for every third-party seller they're working with. And you have some obligation to connect all channels to properly validate, document, and report both your taxable and exempt sales. And if this is something that's being done manually, it's a fairly burdensome task. Last couple items are overpayment and underpayment of tax. We're seeing more and more manufacturers work to improve their sales processes to ensure a positive experience for their customers. And it's not uncommon for businesses to either undercollect or overcollect sales and use tax because it can be difficult to determine which transactions would be exempt and which are taxable, let alone at which rate. Businesses may not realize they've charged a customer the wrong rate until months down the line, which can lead to penalties, steep assessments, and fines. And we've generally seen that auditors take a keen interest in manufacturing because the return on investment for them is higher at the end of the day. Last item I wanted to touch on here is when there are more exemption certificate needs, there's typically more compliance risk. Some of the groups we work with in manufacturing deal with hundreds or thousands of exemption certificates. And even a small manufacturing company we worked with had over 11,000 exemption certificates in the system. And when we look at this from a larger standpoint, there's more than 1,000 different tax exemption forms in use currently in the US. So determining the correct form for each exemption is step one. But from there, you do have to ensure that each form is properly and accurately completed. And finally, these then have to be stored and renewed as required by the state for that certificate. So what we've seen based on all these and based on the steps involved in keeping up-to-date and compliant certificates, it's an area of low-hanging fruit, for tax officials to look on during an audit. So I hope that helps and shed some light on tax challenges and changes for 2023. I did want to move on just briefly about who we are at Avalara. We've been in business for nearly 20 years now, started operating in 2004. In terms of volume, in 2022, we managed more than 31 million documents or certificates for our clients. And we offer some standalone tools, but on top of that, most of our services are based on integration with a financial, billing, or even an e-commerce system. And based on that, we have more than 1,200 signed partner integrations currently. In terms of volume of use, in 2022, we had nearly 40 billion API calls made through our calculation engine Avatax, and we prepared more than 5.2 million returns in that year for our clients. Looking at the clients, we have over 30,000 customers right now across 95 countries. And internally, we have 17 offices around the globe and about 5,000 employees now. The last thing to key on here is I think most folks know us for our flagship tool, Avatax, our tax calculation engine. But through development and mergers and acquisitions, we've really tried to build what we note here as the compliance cloud. And that's end-to-end solutions for compliance needs. So this could be even for new pre-revenue companies and businesses needing to get registered and licensed to do compliant business, all the way to global compliance needs for some of the largest enterprises out there. So I did want to dive into a couple of the solutions that we offer here to talk about how we could potentially address some of those challenges that you might have covered today. So let me go ahead and try to share my next screen here one moment. All right, and now can we see my Avalara screen with the map of the US there?
Hey, John. Yeah, that's what we're looking at now.
Awesome. First, I wanted to touch a little bit on a few tools that are part of our Avalara automation suite. Thing that I want to key on first is what we have here called our economic nexus heat map. So as we talked about, based on the different requirements and thresholds across the country, it can be a fairly significant job to keep up with that. So what we do is we have your transactions and your business going through our platform. We make a point to always check and track where you're at in terms of economic nexus. So step one, we would always make note, where are you registered currently? Where do you have a tax obligation? Because you're already covered there, we're not going to track. But in those other states where you aren't yet registered to collect and file for sales and use tax, we would keep tabs. So this has state or sales thresholds across the country, as well as transaction thresholds if needed. Right now, all of these states in my demo instance are orange, so we've eclipsed that threshold. But as you're getting close, and I think typically about 80–85%, these states would flip to yellow. So you could say, hey, we're approaching the threshold for economic nexus. We can take a proactive move now, get registered, make sure we're compliant, and you can stay ahead of the potential challenge of tracking and making decisions in terms of economic nexus. So I think step one, I always like to show this, that you are going to have some level of where you're at in terms of a tax obligation from stage one. The next item I want to show is through our AvaTax platform. And I know in manufacturing, typically we're going to deal with a lot of exempt sales, but for those situations that are taxable, or even in some cases, if you're doing an assessment for use tax, our tax engine can be used to go down to what we call a rooftop rate level transaction and provide rates for where you're doing business. While this loads, that piece I want to key on a little bit. So as I mentioned at the beginning here, I'm based in Detroit. Very simple when it comes to sales tax across the state. We have a flat 6% rate. However, common scenario we run into is areas like Colorado and Denver specifically. If you're just going by a zip or even a zip +4, you can run into areas where you're not necessarily taxing correctly based on the special and local jurisdictions they have. There's scenarios where you can look at a map and you can have buildings next to one another. And even though they're right next door, they can have a slightly different rate based on how the jurisdictions are drawn. So when we're doing a tax calculation, we are looking at the rooftop level to verify the address and ensure we're delivering the most accurate rate possible based on where the business is being conducted and based on the sourcing rules there. Let me go ahead and pull up a quick transaction to give you an idea of what this looks like. You're going to see, of course, we have our ship from and ship to. This is going to be one of the first items, but we are going to do a calculation at the line item level. So there's a little flow chart, which I think can be a good way to visualize this. And we're going to look at a few different factors as well as part of this transaction. But the main ones here are, number one, are you collecting tax here? Are we registered? Do we have some level of tax obligation? And if yes, we will continue down the chain. On the flip side, if you weren't registered here, if you didn't have a physical presence and you didn't have economic nexus in this state, it would be a no. It would immediately drop the transaction, include no tax. Going forward, however, this was a yes, then it would move to, is your customer taxable? And if so, if you didn't have an exemption certificate on file, again, it's going to continue the transaction. And finally, is this product or service taxable? If yes, if all three, as well as some items behind the scenes are yes, we are going to provide rates for that taxable transaction on this line item. So in this instance, we have a New York state tax, a city tax, as well as a special tax that are all going to get factored in. The next piece, however, is a good example of how that might change. Now we're looking at an installation as opposed to the software itself. So we're still collecting tax here. The customer is still taxable, but this product or service isn't taxable. So you can see that's going to drop to a 0 transaction and a 0 tax rate on the entire or the line item here for the invoice. So in summary, if you're doing a tax review or a tax calculation for a sale, we are going to look at it through a number of factors on a line item level. But to the customer taxable piece, this is an area where I think can pertain a bit more to the manufacturing industry, is around exemptions. And this is going to be our tool, Exemption Certificate Management, or ECM. And we like to think of this as a more active and proactive way to not only store, but manage exemption certificates. So number one, if you are using this tool, you get what we call this compliance overview here on the right, which is a nice visual for the certificates you have on hand, which one of these are valid and which ones are needed or they need validation. On top of that, if yourself or your team is the administrator of managing this task, you can have specific tasks lined up, and you could set these for certificates that are expiring within 30 days. You could set those to different times, but to ensure that you always had valid and up-to-date certificates on file. This could be your customers who don't have any certificate on file and you need to go out and get one. And there's a couple additional things you can add as well. But the nice thing here is this is going to store all of your exemption certificates linked to individual customers, but it also provides some tools to request certificates. We could go in here and you could send bulk requests where you're selecting a large amount of customers. It could be based on a number of factors, but you put together some general messaging requesting certificates from them, and you could run campaigns to ensure you're getting those in. On the flip side, if you just had a couple individual customers who needed a new certificate or they sent you an invalid certificate, you could do single request, select one of the customers you have here, and send out a request directly. So those are some of the high-level features of this tool. But again, the focus is to move from just storing exemption certificates, whether that's in a paper file or a PDF in an F drive, but moving toward storing a live certificate and having processes around keeping those up to date and valid. And then that last item I did want to show here around our automation suite of tools would be returns. And manage returns is what we would call them here at Avalara. We have a lot of folks who are using us for some level of tax compliance, and it could be for a combination of items, so calculation, exemptions, and returns, or some folks who just want assistance on returns. But through this service, we can take your sales data, and this could be through Avatax that I showed earlier, or just through data imports through your own platform. We can then populate the forms where you need to do filings and file them on your behalf. So some folks who have said, hey, we're doing a significant amount of manual work right now, completing forms for sales and use tax returns, we can take that off their plate, do the filing for them, and we can even remit payment on your behalf. So this is a software instance, but also more of a service. So I don't want to go any further here. Happy to answer questions after the fact if this is an area of focus. But I know I'm getting close to running out of my time. So the last thing I wanted to show is an additional tool we have that's called Avalara Tax Research. Right now, this sits separately from the other tools we showed, but it can be a great additional supplement to your tech stack for indirect tax. If you don't have any research tools now, or even on top of research tools you do have. We feel very strongly that this is the widest breadth of indirect tax knowledge out there. There's a lot here, but I want to show two items that I think are really valuable. First being tax answers. So one of the items that we've put together is a library of indirect tax information on a lot of different industries, and it's growing all the time based on how we work with clients. In terms of user interface, it's very simple to navigate, as you can go into industries and you can click through, or you could just do a search if you had a specific instance you're running into. But first things first, I did want to show, the nice thing is you can look at different states you're doing business in and key on that way. And you could even say, hey, we haven't done any research here on where we're doing business and the business activities we're doing in the last X amount of time. So let's see if anything's been updated. I can select any changes in the last 90 days, and immediately we can get attention drawn to states where there was some level of clarification or even a potential change in a state that we're working in, and we can say, let's take a look there. Do we need to update anything that we're doing to ensure we're compliant? It can be a nice visual and quick way to make sure you're covering your tracks. But anyway, I'll dive into Michigan because that's where I'm at. I think the big benefit here is we can look at a variety of different tax scenarios. And at the end of the day, one of the big things here is, if possible, we provide yes or no answers around if an item or service is taxable. So in this instance, is agricultural machinery taxable in Michigan? The answer is no. And then we provide here a plain English explanation. On top of that, we provide a background, but also links directly to the authority where we have reviewed and made this decision, or ruling, let's say, for you to review. Our customers find this is a very simple way to get confident answers back around potential tax challenges. You can also share these directly with your team. On top of that, we have the option included with this tool that's known as Tax Q&A or Ask an Expert. You can reach out to our team if you want some clarification here or had potentially a variance in a question, and ask our team to provide additional light or a different answer based on some other circumstances. If this was more of a confidential question, you could mark that. And I'll show you later, we have a live repository of questions and answers for you to review. And if you didn't check this, this would potentially show up there, but you could also keep this totally private. Our team of tax experts and attorneys will review those questions. Typically in about 48 hours, they're going to get back to you with an answer based on that question. And the last thing I wanted to show on this item was the compare component. So if you said, hey, this is a question that we definitely have to deal with, is agricultural machinery taxable? But we want to now look at the other states where we're doing business. We can compare this exact example across the country. So Alaska and Alabama, there's a little bit of nuance here, so we have to look at an explanation. But we can see there's definitely some variance, because Arizona, it is taxable. Arkansas, it isn't. So it can be a very simple way to look at the type of business you're doing and see how that changes across the country. And the last item that I wanted to show here, apologize, I'm running out of time, is that tax expert Q&A. If you were to ask a question that wasn't marked as confidential, this is where it would show up. And you could see these questions that our customers had asked and see the answers we provided. So you could search industries, states, potentially newer questions to run into scenarios that you might deal with, or you can even ask for additional clarification on the original questions that were posed here. So we found the database is incredibly helpful for our clients to review, but also having an extension of a team, or to some level, a research staff on hand to help with additional clarification and guidance has been hugely beneficial. And the last thing that I want to key on before I pass this over is all of these tools can be used in conjunction with each other as part of a larger Avalara suite, but they can also be used standalone or as a combination of any of them based on your needs. So thank you guys so much for listening to my portion here. Again, happy to answer any questions you have after the fact or on today's call if we can get to them. But I'll go ahead and stop my share and I will pass this over.
Thank you very much, John. This is Diego Fernandez now, and I'm going to go ahead and share my screen. And hopefully everyone is now seeing a JD Edwards Enterprise One order to cash menu. Jerry, can you confirm that on your side?
Yep, we're looking at your screen.
Yep.
That's right.
Thank you very much. All righty. Well, as for this portion of the demo, I'm going to be focused more on the integration and the capabilities that you'll find within the Enterprise One solution of JD Edwards. Obviously, behind this, we are integrated real time with the Avalara Avatax cloud-based APIs, where we pass all of the relevant information into the API for Avalara to evaluate and then return the appropriate response. Whether this customer has an exemption certificate on file, whether that specific location has a nexus responsibility in order to calculate a tax and return those tax amount and those tax rates. So we're going to walk through an order to cash process here so that we can see an example of the integration and the real-time calls to the Avalara AvaTax APIs in order to return back information. We're working in a demonstration environment here, Enterprise 1.9.2, and we'll go ahead and enter in some demonstration information such as my sold to and shipped to. This customer requires a PO. And once I've completed all of the required information, I'll go ahead and move to the second portion of the order entry, which again is within the standard order entry process of JD Edwards, where I'll go ahead and enter the products that the customer is desiring to purchase. Once I've entered all of those products, the JD Edwards Enterprise One order entry application has the capability of presenting order summary information to the Enterprise One user, including the sales tax amounts and tax rates. It's here at this point that we've passed all relevant needed information into the Avalara APIs, product information, customer information, address information, both origin address or the ship from address and destination address, the ship to address on a line by line basis and at an order level basis so that Avalara can evaluate all of the information and return the appropriate sales tax rates, both at a transactional document level for all of the lines and the order itself, along with a detailed line by line transactional information that we capture as part of the order. As you're aware, in JD Edwards, the order information and tax calculation at order entry is just an interpreted number. It's a temporary calculation for informational purposes only. It's later in the process when you invoice and do the sales update that you actually capture that information, what we call permanent transactional information, for reporting and filing capabilities. But the important thing here to note is that to the Enterprise One user, it's business as usual. The information is presented in all the appropriate fields, updated in the appropriate tables and fields of JD Edwards, and the end user really just needs to understand and work with the Enterprise One solution, and everything else is working behind the scenes using the Avalara AvaTax APIs as the calculation engine, and we pass in all of the relevant information to the APIs in order for it to do its work. So here, I'm going to go ahead and save my order. Let me just make a quick note of my order number here. It's 8563 as we're going to walk through the rest of the order to cash process. So we'll go ahead and save that order into the JD Edwards order tables, and we'll walk through the next steps in a typical order to cash process, which in this case is the printing of pick slips. So we'll give this an opportunity to process through here real quick for the order that we're working with. And once it completes its process, we will then take a quick peek at the print slip PDF, which is here. So let's go ahead and open that. And again, as you are aware, in the JD Edwards pick slip print capabilities, you can turn on the pick slip to display a tax amount. So here are my products that we've just entered, and then down below is the tax information. Again, calling out to the Avalara APIs, passing all of the relevant information so that Avalara can then return that tax amount to be included on any documents as needed. And as mentioned earlier, important to note that to the end user, it's business as usual. Nothing to do except that we're using the Avalara system as the system of record and the calculation engine for what all of the tax calculations. So now that we've run pick slips, we're going to go ahead and do what's called the confirm shipment process within the JD Edwards solution. And JD Edwards provides you a confirm shipment application here that we're going to take advantage of as part of this process. I know that in many instances, most of our customers have a separate set of tools or applications to do shipment confirmations or things like handhelds and things of that nature, and even shipping stations where they can move the product to in order to box, label, and ship that product out the door. But for this demonstration, we will be using the standard JD Edwards set of applications, and we'll go ahead and confirm the order lines as part of the order flow. And as part of the order confirmation application that JD Edwards provides us, JD Edwards provides you a capability to add additional cost lines to your order. Typically, these cost lines are added in for things like freight and handling and maybe other special charges that weren't added as part of the original order transaction. So this application will allow me to enter here an example of $20 of freight charges to be added in to my order. So now we've confirmed our order within the JD Edwards system. And if I go into the customer service inquiry application and call up the application here and inquire on our sales order that we're working with, 8563, we'll note that the order originally had 2 lines, and we've added a 3rd line for the freight charge. And now it's sitting at a status of 580, which in my environment here for demonstration purposes means invoicing. So we're ready to run the sales invoice print. And again, what we found is that most customers don't utilize the standard invoice print application that comes with the JD Edwards solution, but rather they take that and maybe modify it to their needs. And our solution, again, because it's integrated using the Avalara AvaTax engine, we can work with all of the enhanced versions that are found within your JD Edwards, as long as you're followed the standard practices that JD Edwards follows in order to create additional versions or additional applications or UBEs reports within the JD Edwards solution. So let's go ahead and run the invoice print program. And as I mentioned earlier, the invoice print program is now going to create a permanent record in the Avalara AvaTax solution, passing all of the relevant transactional information along with the order level information into the Avalara solution, and then obviously print here the invoice PDF for display purposes and to provide a copy obviously to your customer. So here is our invoice for our sales order. Our sales order is 8563. Our invoice number is 6042RI. Here is our breakdown of the various products, including the freight. And then down below, we have our sales tax calculation and rate that is being displayed and presented on the physical documents. Again, to the end user, it's business as usual. The information is presented and provided back to JD Edwards in the same format that it is accustomed to seeing it. So the end user needs to do nothing special as part of the integration with the Avalara system. But if we go out to the Avalara administrative console, this is the same console that John was reflecting earlier, where you configure all of your entities, your legal entities for sales tax calculations, where you store all of your nexus decisions on a jurisdiction basis, and also where you house all of your customer certificates for exemption purposes. All of that is stored within your environment. Here I'm working with a sandbox environment that is connected to our JD Edwards testing and demonstration environment. And it's here that if I look at transactional information that we've just processed for the invoice we just walked through and look at current information, here is our invoice that we just walked through, 6042 RI. If you recall, this is the document key that we pass into the Avalara system in order to maintain the information in the system of record that becomes the Avalara reporting and returns area of the solution. So here we can see our order, we can see our document key, our invoice number, the transactional dates, the purchase order number in case there is a certificate on file that's associated directly to a PO, or whether or not this customer has just a general certificate on file that exempts them from taxes in that specific location, along with passing customer codes and other information. We see summary information here, but we'll also notice that we have line-by-line information that is passed into the Avalara system because Avalara becomes your system of record. Again, it's from here that you're going to generate all of your reporting and all of your filings so that you can have detailed, accurate information that supports all of the tax calculation requirements and also feeds all of the other capabilities that John alluded to, things like the heat map. Are you getting close in certain states? And be able to then go work backwards to validate whether or not an exemption kicked in, whether or not the product, do we collect tax in that location? Is this customer taxable? And if so, is the product or service taxable that we've passed in as the transaction? Here we have a transaction that originated and was being shipped from Pennsylvania and being shipped to Kansas. And we can see the breakdown of all of the jurisdictions that kicked in because this is a taxable calculation on a state, county, city, and special jurisdictions that it calculated, not just from a product by product standpoint, but also via a freight and handling fees. How does Avalara, though, know that this is a freight charge versus a product charge? Well, Avalara, as John spoke to briefly earlier, has a capability of what it calls tax codes. Tax codes are codes that you indicate to the services and or products and that are configured within your JD Edwards as part of the configuration process and are passed into the Avalara system so that Avalara can understand specifically what this charge is for. In this case, a freight charge based on the tax code that's been applied so that it can then determine whether or not tax applies in this specific instance, whether freight is taxable in that state or jurisdictions, whether it's a freight that is fully taxed or tax based proportionately, and so on and so forth. So as you can see, we pass very granular information into the Avalara API so that it can do its magic and it can calculate all of the information that it needs in order to accurately reflect and calculate each jurisdictional tax and store that for all of the reporting and filing purposes. But from a JD Edwards perspective, as I mentioned earlier, it's really business as usual. There's nothing that you need to do special once the solution is implemented, installed and implemented into your system. It just knows that what you're using as your tax engine is the Avalara system so that it can take considerations into place and accurately calculate all of the tax needs. It's also here that John again touched on, where you can manage all of the certificates on file for each of your customers. This customer code that you're seeing here would be your JD Edwards customer code. And it's here that where you would manage all of those certificates. And then obviously based on the information that's already housed within the Avalara system, when an order is placed for a specific customer that has an exemption on file, either for a specific transaction, a specific DO, or a specific location, if it's more of a general certificate on file, then automatically that information is evaluated by the Avalara system, and that is returned to the JD Edwards system, so that JD Edwards know that this transaction is not taxable and no tax is being applied because there is a certificate on file. Now, as you can see, I'm briefly just touched the surface of some of the capabilities that we offer as part of this solution. There is a lot here that we can spend a good amount of time so you can see all of those capabilities, but obviously because of time constraints, we can't do that here today. What I do welcome you to do is to go out to our website, SmarterCommerce.net. And right on our homepage under SmarterCommerce.net, you'll find a section called Resources. And within Resources, you'll find Product Documentation. And it's here that we have a full knowledge base and product guides that are by all of the various products that we offer. Our solution not only offers the Avalara AvaTax connector and to offer all of those capabilities out to JD Edwards customers, but we do have other solutions that we've created over time for the JD Edwards enterprise audience and in use by many of our customers. But here, what I would focus on is coming to the sales tax connector section and reading up on all of the capabilities, because we do things like address validations and verifications. We have obviously an intense amount of capabilities around processing of sales orders utilizing the Avalara AvaTax integration. We also we work with contract and service billing along with warranty billing within the JD Edwards solution. And we support everything around use tax and the process of purchase orders and accounts payable, along with miscellaneous invoices and miscellaneous vouchers. So I welcome you to go out to our information, see all of the capabilities so you can see the breadth of everything that we manage and cover and the integration with between JD Edwards and our connector to the Avalara system. So we're coming up on top of the hour. I'm going to go ahead and stop here my portion of the presentation and pass back the presentation to Jerry for any final comments and a few brief closing points. Thank you to everyone on the call. And if there are any questions, please feel free to add them to the chat.
Appreciate the walkthrough there, Diego. Thank you for that quick demo, as well as from John. Thank you for that quick demo. So at this point, we've reached the end of our actual presentation. I know that there's been a few questions that our team has had the opportunity of answering. I do want to stress this is a very quick overview demonstration. If your team would like to explore Avalara and AvaTax's capabilities further, along with the SmarterCommerce AvaTax connector to JD Edwards, please feel free to reach out. For those of you that have asked if this demonstration has been recorded, it has been recorded. It will be processed, uploaded, and then distributed to everybody who registered to the webinar. Once again, thank you to everybody that joined. We look forward to following up separate conversations with everybody that's interested in doing so. Thank you guys very much. You guys have a great rest of your week.